Hi, and welcome to the Federal Reserve Bank of St. Louis, located in the heart of downtown St. Louis. I'm Tom, and we're standing here just outside of the bank where the Economy Museum is located. You might notice the bars on the window and wonder why. That's because this is one of the most secure buildings in all of St. Louis. That's because a lot of money comes through this building every single day. How much, you ask? We'll get to that here in a bit.
And I'm Andrew. We're going to take you through the museum section by section and show you everything that we have to offer. It's like an economics lesson that you've never seen before. We've got high-tech interactives, we've got unique exhibits, and we've got videos that we're going to show you that are all really cool. So let's head on into the building and show you what we've got.
And just like all Federal Reserve banks, entering the building requires going through a secure screening process.
But since we can't show you that, we'll meet you on the other side in the lobby. See you there.
Just a few moments later.
And now that we've made it through screening, we're here standing in the main lobby. The building opened in 1925, and as you can see, the old adage, they don't build them like they used to, is true.
And in this beautiful lobby is this, our $1 million money cube. The cube is designed to show the space needed to hold 1 million Federal Reserve notes. But don't worry, we're not going to waste 1 million bills. The cube actually only holds 224 real bills. Regardless, it makes for a great backdrop for a group photo. And now we'll get started with the rest of your tour. For those of you watching the video as a part of an online class through Econ Lowdown, each section of the tour will end in a multiple choice quiz.
And for those of you that are watching online, there'll be a short quiz in between each section. For now, let's get started with a video from our president, Jim Bullard.
Hello, I'm Jim Bullard, President and CEO of the Federal Reserve Bank of St. Louis. It's my pleasure to welcome you to the Inside the Economy Museum here at the St. Louis Fed, located in America's heartland. The St. Louis Fed is part of the Federal Reserve System, which includes 12 independent regional reserve banks, along with a board of governors in Washington, D.C. The Fed's decentralized regional structure ensures that economic conditions of communities and industries from all parts of the nation are taken into account in promoting a healthy economy. St. Louis serves as headquarters for the 8th Federal Reserve District, with branch offices in Little Rock, Louisville, and Memphis. Our district covers all or parts of 7 states: Arkansas, Illinois, Indiana, Kentucky, Mississippi, Missouri, and Tennessee. A river runs through us. Actually, several do. Our central location makes us a distribution hub for all modes of transportation. You might even call us a gateway. Innovation and ingenuity are prevalent throughout our region, through world-class academic, research, biotech, and medical institutions, and through Fortune 500 companies that call the 8th District home. We are one of the nation's leading financial services centers, home to major investment firms, as well as a vibrant community banking industry. Many small businesses and startups thrive here as the pioneering spirit that defines our history remains alive and well. Our museum is part of an ongoing commitment to making economic education and financial literacy more accessible to everyone. We hope you enjoy exploring this interactive exhibit and learning more about how the economy works. Thanks again for coming, and welcome.
Hi, I'm Matushka, and I will be your guide for the rest of the tour. I'd also like to introduce my friend, Penny the Penny. She will be with us as well to point out different exhibits and items throughout the tour. Welcome to the original teller area of the bank. This unique area has changed very little since 1925. Back then, bankers would come to these windows to conduct transactions. Today, these teller windows act as the picture frames for activities that have taken place over the last 100 plus years at the St. Louis Fed. Let's go around the room and learn about the history of the bank. The first window looks back on the history of check and cash processing here at the bank. For our younger audiences, did you know that written checks once came to Federal Reserve banks to be processed? Back in the 1920s, the bank's mail division would compare the value of checks against deposit slips from area banks. Over time, checks changed, and so did the way they were processed. In the 1980s, high-speed processing machines would read magnetic ink on the bottom of each check, making the system much faster. Eventually, consumers began using debit cards instead of checks and credit cards as another way to pay for goods. As a result, the number of checks processed by Federal Reserve banks began to decrease. In 2003, Congress passed the Check Clearing for the 21st Century Act, also known as Check 21. This allowed banks to electronically copy checks so they didn't have to send paper checks anywhere to be processed. This further reduced the number of paper checks the Fed processed. As a result, the Federal Reserve reduced its check processing locations from 45 in 2003 down to just one in Atlanta in early 2010. The St. Louis Fed continued to process paper U.S. Treasury checks until 2013, at which point this became an electronic process as well. Of course, we still process a lot of currency here in the bank. Between the headquarters in St. Louis and our branch in Memphis, we process about 1.1 billion individual bills each year. Out of those 1.1 billion bills, we typically shred over 150 million of them. Now, you might be wondering, why do we shred bills? There are two main reasons. One is because they are simply worn out, or in our terms, unfit for circulation. You know when a bill just looks faded and like it's been used one too many times? Well, we shred those bills. We shred and replace them with brand new bills. The other reason we shred a bill is if it has an old design. The Federal Reserve, Bureau of Engraving and Printing, and the U.S. Secret Service work together to update the design of our currency to add security features that help prevent counterfeiting. So we shred the old bills and replace them with new, more secure bills. You may be asking yourself what we do with shredded money. Well, most shreds are composted. Money is made of cotton and linen, so it breaks down easily. The shreds that are not composted are packed into small bags that we give away as free souvenirs. On occasion, we have to burn money. If the money gets moldy or damaged by animals or insects, it can't go through our normal shredding process. A good example of this was when Hurricane Katrina hit New Orleans. Let's watch a short video that explains this further.
In times of crisis, we can play a critical role in the effective functioning of payment systems which touch the lives of virtually every American.
In the months following Hurricane Katrina, the Fed spent a number of weeks burning millions of water-soaked, moldy bills. In all, over 190 million worth of cash.
Initially, the Memphis branch, given its location in western Tennessee and being close to the Mississippi border, actually provided cash directly into the affected region. The fact that we were able to provide currency, we kept the economy flowing so that even in a dire situation, people could still get the basic necessities of life.
The bank employs many economists who study the economy of the region, the U.S., and the world. They publish their research to help others better understand the economy, money, and banking, and the Federal Reserve. Our economists also advise the president of the bank about economic conditions, especially in preparation for Federal Open Market Committee meetings that are usually held in Washington, D.C. At these meetings, the members of the Fed's Board of Governors, along with the 12 bank presidents, make monetary policy decisions. The economists also speak to a wide array of audiences and contribute to the bank's various publications in the areas of macroeconomics, money and banking, and applied microeconomics to help the general public better understand the economy. Beyond our economists, the research division is the home of the Fred Data Service, the Federal Reserve History website, and the Fraser Digital Library. With 500,000 resources from over 7,000 authors, Fraser is a one-stop shop for research on the history of economic policy, finance, and banking that anyone can use, and is a key part of providing greater transparency of the Federal Reserve System. The Economic Education Team at the St. Louis Fed is also part of the Research Division. This team of experienced educators provides classroom resources and professional development for pre-K through college educators around the world. The team also provides the Econ Lowdown Teacher Portal, a site that allows teachers to assign their students videos, online modules, and readings that increase their understanding of economics and personal finance. Each of the Federal Reserve banks has a supervision and regulation division. Staff members include bank examiners who examine and inspect state-chartered banks that are members of the Federal Reserve System, bank holding companies, savings and loan holding companies, and financial holding companies. They also regularly evaluate the degree to which banking organizations are complying with consumer protection and civil rights laws enacted by Congress. Staying in touch with the 8th District is a priority of the Community Development Department at the St. Louis Fed. Understanding and examining how individuals and communities that are low to moderate income, or LMI, or systemically deprived helps the bank better understand the economic conditions throughout the district's diverse communities. Community development staff work at the local, regional, and national levels to transform ways in which development and growth are being promoted in all communities through economic inclusion and equal opportunities to people of all races. When visiting the bank in person, you are greeted by our law enforcement officers when you arrive. Our law enforcement officers protect the bank and its assets 24 hours a day, 7 days a week. Also seen here is the bank's real vault door. This door weighs 45 tons and is 31 inches thick of solid steel. While we can't tell you how much money is stored in the vault, we can tell you that 9 to 10 million bills move in and out of the bank every day. Our last stop in the teller area is the map of the 12 Federal Reserve districts. Each district has a main bank location, as seen with the large circles with the numbers and letters in them. Many of the districts also have branch locations to spread the reach of the banks, and those are shown by the smaller black dots. What do you notice about the location of the districts and office locations? If you said most are in the east, you are correct. The Federal Reserve System was formed in 1913 when a vast majority of the U.S. population lived in the eastern half of the country. The locations of the reserve banks were partially selected based upon population centers. If you look at Missouri on the map, you will also notice that it is the only state with 2 reserve banks. That's because when the Fed was created, St. Louis and Kansas City were both established banking centers with strong transportation and communication networks to serve their member banks. Along with telling the story of the bank over the last 100 years, this teller area also acts as the transition point from the historic look of the bank to a modern high-tech museum. Let's see that happen.
Home prices rose at their fastest rate.
Stocks began trading this morning in record territory.
And we turn back to the Fed's decision to shift to a more aggressive course of action.
The U.S. economy has improved in every part of the country this spring.
Turning to the economy, encouraging jobs numbers help.
The economy. We hear about it every day. But what's really driving the economy? You. Every dollar you earn, every dollar you save, every dollar you spend. Whether you're in St. Louis or DC, Rome or Beijing, whether you're young or old, whether you save or spend a little or a lot, we are all connected. Now it's time to go inside the economy.
Let's now take a quick break to see what you have learned. This zone is all about how you participate in the economy and focuses on economic principles that relate to you as an individual. This exhibit explores many of the different ways that you participate in the economy. While they might not all relate specifically to you, there is information you are sure to find interesting. For this example, let's take a look at some economic facts about taking vacations. Looking at this first fact, the vacation travel industry is a very lucrative one, accounting for $792 billion in spending in 2019. With all the money being spent on vacation travel, there have to be people working at all the various destinations. There are so many, in fact, 1 out of every 10 US jobs depends on travel and tourism. As much as people want to take vacations, sometimes it's just not that easy to get away from work. Did you know more than half of workers left vacation time unused in 2018, accounting for 768 million unused vacation days? And when people are able to get away from work to travel, 4 out of every 5 trips within the US are done for leisure purposes. Throughout the museum, you will see these oversized words that introduce different topics. Here you can learn about scarcity. What is scarcity, you might ask? It is simply when there are not enough resources to produce everyone's wants. Because of this, you have to make choices. You might really want a new phone and a new bike. Let's say you have been working and saving your money, but only have enough money to buy either the phone or the bike. Scarcity of resources means you must choose. The terms physical capital and human capital may sound complex, but they are actually fairly simple. Physical capital represents the tools, equipment, and machinery used to produce goods and services. Let's say you run a lawn care business. The lawnmower and trimmer you use on the job are examples of physical capital. Human capital relates to the physical capital as it is the education, skills, and talents that people use to make goods and services. Thinking back to the lawn care business, you first have to learn how to use the lawnmower and trimmer before you become good at operating them. The panels on the exhibit show many examples of physical and human capital, such as how music lessons relate to discipline, goal achievement, and confidence. Let's now learn about another economic concept, opportunity cost, what you give up when you make a decision. Using our previous example, if you decided to buy a new phone instead of a bike, the bike is your opportunity cost. When famous economist Milton Friedman said, "There's no such thing as a free lunch," he was actually saying that there is always a cost, an opportunity cost. Someone is paying for the lunch even if there is no cost to you. By accepting a free lunch, you may be obligating yourself to something in the future. You can see more examples of opportunity cost in the next exhibit called What Do You Want? Here you are presented with 2 different options, and you have to make a decision of which activity you would rather do. In this example, let's look at the choices a teenager might have to make. For these questions, there is no wrong answer. It's all about your preference. While not all of our choices are monetary choices, the first question is, which would you rather do? Mow the lawn and earn $20 or go to the movies and spend $10? Let's choose to mow the lawn. As you see, by making this choice, you not only earn $20 from working, but you now have $30 more than you would have if you had spent $10 going to the movie. The next choice might be a bit tougher. Would you rather attend a friend's going away party or keep your commitment volunteering at a food pantry? Let's choose volunteering. As you can see, there isn't a wrong answer. You gave up attending the party and stuck to your commitment, helping the community. This next exhibit shows that your education level affects how likely someone is to have a job, as well as how much money you may earn weekly because of your education. Using the slider in the middle, you can choose different education levels and see the unemployment rate and median weekly earnings associated with that level. So, what do you notice? The bars located at the bottom of the slider are for someone with less than a high school diploma. You can see the bar on the left is pretty large. What this means is, at that level of education, there is a higher unemployment rate. The bar on the right shows the weekly earnings, meaning the weekly pay is fairly low. Now, as the slider moves up, the bars on the left get smaller and the bars on the right get larger. This shows a direct relationship between more education and higher pay. As people achieve higher levels of education, they have an easier time finding a job, and their median weekly earnings increase. As you acquire more skills and knowledge through education and training, also known as human capital, an employer is more willing to hire you and also willing to pay you a higher wage. Now let's go to the next exhibit. Here you will learn about how your decisions can affect how much money you have in savings or how much debt you may have in the future. This exhibit has several different scenarios, such as starting a savings account or the real cost of buying a couch with a credit card. Let's take a look at purchasing a car. After selecting what type of car you would like to buy, you can adjust loan interest rates and monthly payments to see how they affect the overall price of a car. It's important to recognize that when you take out a loan to buy a car, you must repay the amount of the loan plus the amount of interest charged over the life of the loan. When it comes time to purchase an actual car, it's important to know that you can't choose the interest rate like in our exhibit. Your interest rate is determined by your credit history. Also, by making a down payment on the car and being willing to make a larger payment each month, you can reduce the total cost of the car. Let's take a quick break to see what you have learned. As you begin exploring this zone, you come to one of our biggest exhibits, the trading pit. Here, players have the opportunity to understand how prices are determined through the interactions of buyers and sellers in markets. In this multiplayer competition-based game, players take role as buyers or sellers. Buyers seek to buy products at the lowest possible price. Sellers seek to sell products at the highest possible price. Through their interaction in the marketplace, they negotiate prices until they reach market equilibrium. Players also deal with changing prices throughout the round as they send and accept offers. The player with the most money at the end of a timed round wins. People learn in many different ways. Here, you get to incorporate your sense of smell to learn about trade. But please don't try to sniff your screen, it doesn't work. Certain spices and foods used to be very expensive because they were so scarce. But because of increased international trade, now you can get them today at relatively low prices. Let's look at two of these items and see if you can guess what they are. The first food was brought back from the Americas to Europe hundreds of years ago. Demand for this fruit made it so expensive that it was considered a status symbol. It is grown in pineries, and you can eat it fresh, canned, and preserved. Can you guess what this fruit is? If you guessed a pineapple, you are correct. Most of the pineapples consumed in the US are imported from Costa Rica or Mexico. The next food was used by the Aztecs and Mayans to make a foamy drink from beans, which they thought had medicinal powers. In the 1700s, technology improved the processing of the beans and thus reduced the price of the product dramatically, making it available to nearly everyone. Can you guess the food? If you said chocolate, you are correct. And did you know the average American eats 12 pounds of chocolate each year? As you may know, trade happens between people in different countries, allowing them to get what they want. The US, for example, exports products like corn and soybeans that go to countries like China or Japan. If you look at the globe, it shows some of the leading exports and imports from around the world. You can also see that places like New Zealand export kiwis and China exports rice. Barter occurs when people trade goods and services for other goods and services without using money. Oftentimes, people trade things that they value less in order to obtain things that they value more. Here's a great example of a real-life bartering success story. Steve Ortiz, whom you see here, started off with a free phone that his friend gave him. Over the course of 2 years, and after making 14 trades, Steve became the proud owner of a Porsche convertible. While this is a rather unusual example, most of us have bartered at one point or another. For example, we may have bartered with a friend at the lunch table, exchanging our bag of chips for their dessert. This exhibit allows you to select an inexpensive item and attempt to barter for an item that you really want. It might take several trades to get there, but you also might not get what you want in the end. That's one of the problems with bartering. In order for a trade to happen, both people must want what the other has. This and other challenges with bartering made getting what people want difficult. That is why thousands of years ago, people came up with the first forms of money. Let's go learn about some of those now. While a good portion of the museum focuses on the economy, there is also a really unique display of currency. As you just learned, bartering can help you get the items you want, but it's not the easiest way to do it. Thousands of years ago, people realized the same thing. They recognized that they needed something that would make trade easier, a medium of exchange. Within the case, you can see many forms of the earliest money. You'll notice that some of the items look like coins we use today, but others are very unique, taking the form of knives, axes, and heavy plates. The next exhibit is about something all of you are familiar with when it comes to a medium of exchange, a US penny. But in this case, it is a very large penny. Here stands our giant penny. It stands 8 feet tall, but unfortunately, it can't be used as money. The most common misconception about this coin is the name. The penny is not its real name. It is a nickname derived from the British pence. The actual name of the penny is the cent, or 1 cent coin. There are a lot of pennies in circulation. In fact, the US Mint makes over 7 million pennies a year. Also, if you have heard that the penny costs more to make than it's worth, that's true. A penny costs just under 2 cents to make, even though it's worth only 1 cent. While you aren't able to see our vault on this tour, the vault video exhibit is the next best thing. As mentioned earlier, the money in the vault is protected by a 45-ton vault door. The door is so perfectly balanced that, as you can see here, one of our law enforcement officers is able to open it on his own. But why is there such a huge vault door? That's because the Federal Reserve is the bank for banks. Commercial banks hold a certain amount of currency in their vaults, but they send any excess money for us to hold via armored cars. Once it gets to the bank, our cash department staff take delivery of it. In this video, they're opening the bags from the banks to count the number of bundles. A bundle contains 10 straps of bills, and each strap contains 100 bills. So a bundle contains 1,000 bills. Once the bills are counted in bundles, they are separated by denomination into large cash containers to then be counted by our high-speed processing machines. These machines check to see if a bill is fit or good to be placed back in circulation and verify that each bill in a strap is the same denomination. The machines also intercept suspect counterfeit notes, so they can be taken out of circulation. Old, worn-out notes are then shredded. Many are put in bags and given away in the museum. The fit bills are then stored in the vault until a commercial bank needs them. Located in the center of the museum is the Connections Theater. This 9-panel, multi-dimensional screen features unique videos on a variety of economic and money-related topics. 2 main videos focus on the Fed's history and how trade connects people around the world. Let's take a few minutes to learn about our history with our video, The Fed in 5.
Money. You put it in the bank, and it's there when you want it. But what if you went to the ATM and the bank didn't have your cash? It happened in the past. And that's why the Federal Reserve was created, to keep the financial system stable. The Fed provides short-term loans to banks so they have enough money on hand in times of financial stress. But travel back in time to before 1913. No one was responsible for the health of our banking system. There was no lender of last resort. Why? Because from our country's earliest history, some people opposed a central bank. They feared it would put too much power in too few hands. But as the country grew, frequent banking panics kept the economy on a roller coaster ride, complete with ups and downs, chills and spills. The last straw came in 1907. One of Wall Street's largest financial institutions, the Knickerbocker Trust Company, went bankrupt. Panic was widespread. People raced to withdraw their savings, only to find that banks didn't have cash available. Financier J.P. Morgan and a group of investors rescued the economy with emergency loans to banks. But it was clear that relying on wealthy individuals wasn't the right long-term solution for the nation. It was time for a change. The United States needed a strong central bank that would keep money flowing during times of crisis and help prevent bank runs. To keep power from being concentrated in Washington or Wall Street, lawmakers spread control across the country. The Federal Reserve Act of 1913 established 12 independent reserve banks, in addition to a board of governors in Washington. The structure would insulate the Fed from partisan politics and powerful financial interests. Over time, the Fed learned how the supply of money and credit affects financial markets and the economy. By the 1950s, the Fed was working to counter the ups and downs of booms and busts and limit inflation. In the late 70s, a new crisis hit.
Bad news on the inflation front. Wholesale prices were up again in February.
High unemployment with high inflation challenged America and the Fed. Oil price hikes and poor policy choices made the situation worse. In 1979, Paul Volcker was appointed Fed chairman. Volcker and the Federal Open Market Committee put the brakes on inflation. They reduced the growth of the money supply and raised interest rates. Once inflation was back in check, the economy started growing again and unemployment fell.
Breaking news here. Stocks all around the world are tanking.
More than 500,000 Americans lost their jobs last month. That is the worst month for job losses.
More recently, in 2008, the Fed responded to the largest financial crisis since the Great Depression. Many major financial institutions were on the verge of collapse. Unemployment skyrocketed.
The Federal Reserve is more than happy to try to work with you on
The
specific.
Fed made emergency loans to stabilize the financial system, and then purchased bonds to lower interest rates and help stimulate the economy. Though the Fed wasn't able to prevent what has been called the Great Recession, its actions helped keep the situation from being much worse. Beyond financial crises, there will always be unforeseen events and natural disasters. The Fed can do a lot to cushion their economic impact and keep money flowing. So the next time you reach into your wallet or drop by an ATM, take a look at one of the bills and find the words Federal Reserve Note. And remember, the Fed's goal is to help keep the economy healthy.
Let's take a quick break to see what you have learned. You're likely familiar with the phrase financial institutions, but what are those institutions? One way to think about it is that some of these companies are banks, while other companies that are considered financial institutions are non-banks. Banks are institutions that accept deposits and makes loans. These include commercial banks, savings and loan associations, mutual savings banks, and credit unions. Companies that are considered financial institutions but not banks include insurance companies, finance companies, pension funds, mutual fund, and investment banks. As mentioned earlier, the Federal Reserve acts as the bank for banks and the federal government. The Fed holds deposits for commercial banks and offers loans to those banks in times of financial stress. But that's not all we do. The Federal Reserve promotes financial stability in a number of ways during day-to-day activities as well as in times of crisis. In normal times, the Fed has 4 important roles to maintain a stable environment: conducting monetary policy, supervising and regulating banks, providing payment services for the U.S. Treasury, and serving as the lender of last resort for banks and other financial institutions. However, sometimes circumstances arise to threaten the stable environment. Let's take a look at a time when the Fed had to react to an unforeseen situation.
You're in the Situation Room. Happening now. We're following breaking news.
Less than 2 years after Chairman Bernanke took office, he was faced with the worst financial crisis since the Great Depression.
In a panic, when people are pulling all their money out of financial institutions, what the central bank does is provide short-term loans, which help the banks stabilize. And that's what we did during 2008, 2009. The If you ask most people, I think they would say that the Fed spent a lot of taxpayer money trying to stop the crisis and bailed out banks and that kind of thing. The fact is the Fed doesn't spend government money. What the Fed does is buy and sell assets in the market.
Those assets are U.S. Treasury bonds and government-guaranteed mortgage securities.
Or we make short-term loans, which are then repaid.
Loans repaid with interest.
In the last 3 years, the Fed has given the Treasury $200 billion. That's profit, that's not loss, that's not cost.
In order to provide a broad perspective on the economy in all parts of the nation, the Federal Reserve required a unique structure. As mentioned earlier, the Fed consists of 12 regional reserve banks that provide feedback on business, economic, and banking conditions in each district. The president of each bank is nominated by the bank's board of directors and confirmed by the Federal Reserve Board of Governors. The Board of Governors consists of a 7-member group that provides a national view of economic conditions. The governors are nominated by the President of the United States and confirmed by the Senate for a 14-year term. Together, the Fed governors and Reserve Bank presidents make up the Federal Open Market Committee, or FOMC. This group serves as the decision-making body for U.S. monetary policy. In order to achieve its dual mandate to promote maximum sustainable employment and stable prices, the FOMC can ease, tighten, or maintain current monetary policies. The FOMC gathers at 8 regularly scheduled meetings each year to discuss the nation's economy. All 7 governors and the president of the New York Fed vote at each meeting. Of the remaining 11 bank presidents, 4 rotate each year to fill out the remaining voting seats. This next exhibit might appear familiar as it looks similar to a game most of you have played at some point. The woodblock tower teaches visitors about banking laws and regulations. Just like the blocks that hold up this tower, these laws often build on one another and interconnect, creating a complex and multifaceted banking system. The best part of this fun exhibit is the hidden drawers that open up to reveal more facts and information about these laws. The museum's scrolling timeline allows you to examine an extensive list of dates and events that have taken place both here at the St. Louis Fed as well as in the Federal Reserve System over the last 100 years. For example, the St. Louis Fed building opened in 1925, and here you can view a picture of what it looked like at that time. You can see wires running across the roads and attached to the building. Those were for the streetcar lines on Broadway. The hooks that held them are still in the side of the building today. Other events, such as the selection of each St. Louis Bank president and Federal Reserve chair, are highlighted. If you want to learn more history, be sure to visit Fraser, the bank's digital library of U.S. economic, financial, and banking history, particularly the history of the Fed system. This image of the Earth's city lights was created from NASA's system, designed to track clouds by moonlight, as well as permanent lights on the Earth's surface. The brightest areas of the Earth are those most urbanized, not necessarily the most populated. The museum is located here in St. Louis, but you can easily identify several other nearby and large cities on the map. Kansas City, Chicago, Washington, D.C., and New York are easy to identify. There are also some interesting things that can be seen around the world. In Egypt, the path of the Nile River is very prominent, as 95% of that nation's residents live along the river. Long stretches of lights across Russia show cities and towns along the Trans-Siberian Railway. Finally, looking at the Korean Peninsula, there is a significant difference between North Korea and South Korea. While South Korea emits bright light from its many large cities, some parts of North Korea are so dark, it is hard to distinguish land from the neighboring ocean. As you saw in the Earth at Night photo, The amount of light emanating from cities around the world can be quite different from one another. Other differences can be seen in how people travel, the food people eat, and what school classrooms look like. Take a look at these classrooms from around the world and compare them with a classroom you have been in. Is there one that looks similar to your classroom? Next is the museum's most popular exhibit, the gold bar. This very secure exhibit holds a real gold bar. If you have an opportunity to visit the museum in person, you can even try to lift it, but it's not easy. The bar doesn't seem very big, measuring just 10 inches long, but it weighs in at nearly 28 pounds because gold is a very dense material. Besides providing the opportunity to lift a gold bar, this exhibit also explains the gold standard and why the US no longer uses it. A gold standard is a monetary system in which the value of money is equal to a specified amount of gold. To maintain a gold standard, governments must be ready and willing to buy and sell gold at a set price. When the Fed was formed in 1913, a major part of its job was to maintain the value of the dollar in terms of gold. At that time, the Fed had to have 40 cents worth of gold for every dollar it issued. During the Great Depression, the demand for goods and services fell and dragged down the US price level. Requiring the Fed to hold gold to create money severely restricted its ability to stimulate the economy and maintain stable prices. The US abandoned the gold standard in the 1930s and has used a fiat currency system ever since. A fiat system means that money is not backed by gold, but by the full faith and credit of the government. The gold bar exhibit also identifies where gold is stored in the US. As you can see from this pie chart, over half of the gold in the US is held at Fort Knox in Kentucky. A majority of the rest is held at the other US Mint facilities, while the New York Federal Reserve Bank holds the remaining 5%. Here you can also see just how large the supply of gold really is. It weighs more than some of the most well-known monuments in the country, including the Statue of Liberty and the Liberty Bell. The last two exhibits look at two free public resources hosted here at the bank. FRED, or Federal Reserve Economic Data, is the home of hundreds of thousands of data figures, including everyday facts like interest rates, employment, housing statistics, and even the price of a gallon of gas. You can visit FRED online or download the FRED app on your phone to analyze economic data that interest you. Some of this data can also be seen in GeoFred. This unique site allows you to create maps of data found in FRED. Let's look at an example focusing on the percent of population with a high school diploma here in the 8th district. That brings you to the end of the tour. We hope that you enjoyed it and come away with a better understanding of the economy. At the very least, we hope we've piqued your interest to come lift our genuine gold bar in person. Thanks for visiting, and we hope to someday host you right here in St. Louis.